All right, important updates there from the perspective of your personal finances if you indeed do hold those sovereign gold bonds. Let's take a check on some of the stocks that have been active in trade on account of being in the news. Now, Tata Communications, this is a stock that Cheryl mentioned to you. It's down about 4.5% or thereabouts. And you're aware by now that there is an offer for sale that has been launched by the government. The OFS opened for non-retail investors today, and it will open for retail investors tomorrow. The floor price has been set at 1,161 per share. That's a 9.8% discount to Monday's closing price, which kind of explains the action that you're seeing in the market today. Adani Ports and SEZ is also in focus. It has received a letter of intent for development and operations of West Container Terminal in Colombo, and the company will partner a couple of other companies as part of a consortium. It will hold 51% in that consortium, and the terminal will be developed on a build, operate, transfer basis for a period of 35 years through a public-private partnership. Significant update there for Adani Ports. All cargo logistics in focus because the board has declared an interim dividend of 2 rupees per share. The record date has been set as the 23rd of March. Max Healthcare has acquired 42.8%, which is the residual stake of Saket City Hospitals from Kayak Investments for $64 million. It now holds 100% in that company. AU Small Finance Bank has raised 625.5 crore rupees through its QIP issue. It has allotted 50 lakh shares at an issue price of 1,251 per share. That's a 6% premium to the QIP floor price. Godrej Properties has approved the closure of its QIP. The issue price there was 1,450 rupees per share, and that was a 4% or 4.2% discount to the floor price. And finally, Royal Orchid has also announced the opening of 8 new projects or properties. The company will add 7 more hotels in the first half of the next financial year. And then there are 3 brokerage reports that were interesting that I picked up. There is Credit Suisse on L&T Finance. They've maintained their outperform rating with a target of 122 rupees per share. They've said that they expect a loan growth to recover following 2 years of zero growth. Apart from that, you have Morgan Stanley on Asian Paints. It has maintained its overweight rating with a target of 3,000 rupees per share. It has said that its underperformance vis-a-vis the benchmark is not something that has happened in the past. The counter has underperformed the Sensex by as much as 21% in the year-to-date period, and they are confident that Asian Paints can compete effectively in the space that it operates in. There's another report by Morgan Stanley, this time on IndusInd Bank. It has again maintained its overweight rating on this counter with a target of 1,225 rupees per share. They hosted the managing director and CEO as part of their financial strip, and they said that the bank highlighted sustained macro recovery. They've also said that they expect moderation in credit costs next year with steady margins. All right, then let's go across to our guests. They've been waiting patiently for us. Thank you so much, Kunal Botra, who's joining us again. And you have also Ashish Maheshwari, who is Director of Blue Ocean Strategic Advisors. All right, so but let's go straight away, Kunal. Thanks so much for joining us. As I said, good morning to you. And what are your high risk and low risk ideas today?
So good morning, Alex. I think it's been a very volatile and a choppy kind of a market. Last 2 days, we've seen 2 different colors of the market texture. But then one of the texture which is remaining constant is that the mid caps are doing extremely well for themselves. So the 2 picks which I'm highlighting are specifically, in one of them specifically is from the mid cap basket, and one of the few stocks or the fresh names which has given a breakout on the long term charts. Fortis Healthcare is the first stock which I would suggest as a buy. The stock has given a multi-year breakout on the line charts as well. On the last 2 days or 3 days of cumulative volume action as well, there has been a very sudden jump or increase in the volume action for Fortis as well. So both in terms of the price as well as on the volume backing, I believe that this could be potentially a very strong breakout for the stock. Would suggest a buy with a target of 225 at least, and stoppers could be kept at 185 levels. The second stock which I'm suggesting is from the large cap space. It's a buy on UPL. Again, one of the few stocks which has shown signs of potential of breakout on the upside. Somehow the stock has remained more sideways. But then I believe that every time the market gets into some sort of a upward traction, UPL tends to outperform, and we've seen some rally picking up into this name as well. So would suggest a buy on UPL from current levels, expecting the stock to break past or come at least very close to its all-time high levels of 700 odd. So targets of 700 on UPL, suggesting a buy with its stoppers to be kept at 600.
All right, thanks Kunal for that. UPL and Fortis are the two buy calls from Kunal's side. Let's go across to Ashish. Ashish, good morning to you as well. Thanks so much for joining in. What are your high risk and low risk ideas? I know that the markets are choppy right now, but on the fundamentals, what looks good to you?
Yeah, couple of ideas in mid cap and a small cap segment which have profit up to 112 crore, which was 39 crore, which they did same quarter earlier year. Again, they are into home textile, yarn, chemicals, and paper. And if you see in all these segments, stocks are doing pretty well now because the prices are really skyrocketing for paper as well as chemical and yarn. So I'm expecting one of the best quarter is going to be March quarter for this company. And this is the reason we have seen a consistent rise in stock price also of Trident. So my target for next 6 months is going to be 20 rupees and Trident Limited. Mind it is 1 rupee paid up stock. Next idea which I like in high risk, high return segment is Hpl Electric. This is a company where IPO came at 202 rupees and the stock is available at around 62 rupees still. And there's no change in fundamentals as such from the time IPO came to till date. And again, there's a company which is into all those segments where we see V-Guard or Polycab, and they are the ones like which are enjoying market caps around 10,000 to 20,000 crore, and this is still less than 1,000 crore market cap company. And they are again into meters, lights, switch gears, and all those electrical accessories. Another comforting factor is the promoter hold is still 72% in the company, and this is a pretty old company. So in my view, this stock is all set for getting re-rated now, and we may see this stock in 3 digits in the next 6 months' time.
Those are Ashish's top picks coming in. The high risk, high return idea is Hpl Electric, and low risk, low return idea is Trident. All right, and like we've been telling you, this week we have 5 IPOs that are set to open, and Lakshmi Organics IPO is underway for the second day. It was subscribed about 2.28 times, and retail portion book was subscribed about 4.34 times on day 1. We spoke to the management yesterday to get insights about the company and the future plan. Listen in.
Indeed, we are raising actually 800 crores, and 200 crores has been allocated as a pre-IPO block. 500 crores of the 800 will go into the company, and we will be primarily utilizing that for 2 major capex expansions that we have. One in the fluorochemical business segment that we are getting into, and the existing in the SI vertical or specialty intermediates vertical that we have.
Okay, stand corrected there with that fundraise. Now, Partha, your products are mainly divided into 2 broad categories, the AI and SI. Just give us a sense of the demand scenario as well as the kind of growth potential that you see for both of these products.
So, as you rightly said, there are 2 verticals, essentially the AI and the SI currently. These we cater through in both of the segments. We cater to the pharma, agro, pigments and coatings, paints, etc. Flexible packaging, and if you observe, all these end user markets are growing at double-digit numbers, and they are also expected to grow at that level domestically and internationally. They are high single digit. Therefore, I think we are in the right space in both the verticals. In the AI space, we are probably slightly upstream of the FMCG's place, and therefore we expect good traction going forward in both these verticals. Our new vertical, FI, which is fluorochemicals, we are starting off with, and we expect to complete the project in the next financial year. Historically, we have grown the revenues, the EBITDA, and the net worth by around 20% over the medium to longer term, and we expect to maintain this trajectory and better.
Sure, that makes sense. Harsh, just to get and understand as well, in terms of the kind of segments you're looking at, ethyl acetate has significant market share, of course. The kind of revenue you gain from that segment, the margin contribution, and how you plan to expand market share both in India and globally going forward.
Sure. So in both our verticals, we know our AI business, which is ethyl acetate predominantly, we have about 30% market share in India. And we are one of the largest global exporters out of India as well. We believe that with our the international space is also a new area that we're looking to grow into.
All right, and that was the management of Lakshmi Organics outlining more about the company, giving insight about their future plans as well. All right, on that note, we slip into a break on this edition of Buy Now, Sell Now. Once we come back from break, there will be query segment, and all your queries will be resolved by Kunal and Ashish today, so stay tuned.
This is the segment on the show when we take you through your queries and we get them answered. In fact, if you have to write to us, you can send us a query on any one of our social media platforms, or in fact, you can mail us. Let me take the first one for today, though. That's from Chandrasekharan. Thank you so much, Chandrasekharan, for writing in. You are holding 300 shares of Quest Corp, you say, that you bought at 780 rupees per share. And you've had quite a bit of patience with this one. I must commend you. You're looking for an outlook for the next 1 year. I'm going to go across to Kunal. Kunal, it seems like he's bought this perhaps in 2018, and from what I can see on the chart, and he's held it through some pretty rough weather. He's asking for the next 1 year, though. What's the outlook for him?
So, Alex, I think 780 was 800 was also the recent high for Quest Corp. So, but the charts for Quest Corp on the medium term to long term time frame charts are very encouraging. So even though the purchase price could probably be have been a bit more lower, but nevertheless I think the viewer still has invested into a stock which looks quite strong and durable, at least in terms of trends. Now technically in 2020 or end of 2019, start of 2020, the stock had resistance around the 600 mark, and from 600 you saw the stock falling up to even levels below 200 in the March 2020 sell-off. So from there on, from 200 levels, the stock has done pretty well for itself. From it's almost gone up 4x, 5x from those kind of levels. So it's been a very good recovery for Quest Corp. It's natural that post this strong and steady price uptrend, that the stock consolidates for some time before it tends to continue the uptrend higher. So I would suggest that you can hold on to the stock, and if your purchase price is at 780 levels, I would suggest that look to average further. If the stock happens to test back this, the breakout line, which is around the 600 mark. So I think 600 should be a point for you to average and try to bring your cost price lower, because I believe that the stock structure on the longer term charts seems very attractive. And I believe if you are in for at least the next 1.5 odd year, then you could be in for some good reward on the upside for the stock. So buy on dips closer to that 600 mark is what I would advise to the investor.
All right, Chandra, there you have it. And Chandra has managed to send in a second query as well. He's holding on to 1,000 shares of Ashok Leyland that he bought at 95 rupees per share. That I think is the average buy price for him. He's looking again for a 1 year outlook, but I'll still go on the fundamentals to Ashish. Ashish, it's a decent buy price if you look at the price of Ashok Leyland even as it stands right now. But what's the outlook for the CV segment, and would you say he should look at something else in the auto space?
No, I think he can continue to remain invested in Ashok Leyland as such. Uh, though after touching 138 high, stock is into consolidation mode. But in my view, medium and heavy commercial vehicle segment will continue to show good growth in coming at least couple of years, because the kind of thrust government is giving on infrastructure and the way economy is again bouncing back, Ashok Leyland will surely stand to gain. And again, if we see their monthly sales numbers, etc., they are also encouraging. Only thing is their raw material prices are going up of the basic raw material like steel and other materials, which may affect their margins for some time. But in my view, you can continue to remain invested, and in the next 6 months, you should get at least 20% upside in Ashok Leyland from current price.
Right, so that is the view coming in from Ashish on Ashok Leyland. Moving on, let's get on board our next viewer query, and this is from Suresh Babu. He's saying that he's holding 5,000 shares of CDSL at 600 rupees per share. He wants to know the 6-month horizon for the stock. Kunal, I'll come first to you on CDSL for the next 6 months. How is the chart looking for this particular counter? 5,000 shares our viewer has bought at 600 rupees per share.
So I think the entry point is a bit of a concern, Cheryl, because the stock charts, of course, in the last 9-10 months have looked phenomenal. From being a stock which was at 300 or sub 300 rupees, it's done very well for itself in this last 9-month, 12-month recovery. But then again, at this 600 mark is where you're seeing some consolidation coming across for CDSL. Many of the momentum indicators on the charts, and I'm talking of at least the quarterly indicators, are coming back into a consolidation zone. So which means that probably 600 could act as a pivot point for the stock, and it may probably try and double around the 600 mark plus or minus 20-25 odd rupees for the next couple of weeks. So I would advise that if you're in from a shorter term view, then I believe you should look to book out your profits over here. If you're getting 2.5 or 3%, assuming it's from short-term view, and then look to buy back the stock at a lower price. I think closer to 525, 540 levels. I think that could be a good entry point for CDSL. So my advice would be to try and exit the stock and then look to buy back at lower levels, closer to that 520, 540 levels.
All right, that's the view coming in from Kunal for CDSL. But let's move on to our next viewer query, and it's from Navendu Sharma from Patna. He's written to us saying that he's holding 1,200 shares of Torrent Power at 320 rupees per share. He wants to know what's the short-term, medium-term as well as long-term prospect. I will come first to Ashish on this particular query. Ashish, Torrent Power, our viewer has bought about 1,200 shares at 320 rupees per share. From that level, definitely the stock has seen some rise, but what's the outlook looking like for the stock?
Overall, I'm quite bullish on future prospects of power companies as such, because the way demand is again going up in the system for power, all these companies like we have seen rally in Adani Power or Tata Power, even in Torrent we have seen decent rally, will continue first of all. So as far as we talk about Torrent Power, again one of the very steady and consistent player as far as power sector is concerned. And they are the ones who still enjoy debt equity of less than 1, which is one of the rare in power sector, and it helps them to survive and grow over a period of time. And now they've started bidding for newer projects like Daman and Diu. They are again number 1 for distribution segment, etc. So my suggestion will be to remain invested in Torrent Power, and as I'm again bullish on the power sector, you may expect another 20-25% upside in Torrent Power in the next 1 year time, with very limited downsides.
All right, that is the view of Ashish coming on Torrent Power, bullish on the entire power sector, believes that you should stay invested in Torrent Power, also sees a significant upside in that particular count over the next 1 year. Kunal, do you echo the similar view on Torrent Power? How are the charts at least looking for this particular counter?
Absolutely. So I think very bullish on power sector overall. Torrent Power also has given a big breakout. I think it's almost a 7-8 year breakout for Torrent Power as well. The moment the stock had broken past about those 380, 400 levels. So I think from there on, it's moving into a different trajectory for itself. So it's a stock which is doing pretty well. The sector overall is performing quite well. You have new emerging candidates of breakouts in terms of Tata Power, etc. as well. So I think the entire space is buzzing out quite well. So I think in that aspect, you can hold on to this sector, and I think if you probably have space for adding one more stock, assumingly on the power side, then I would advise that look at Tata Power even at current levels or on dips closer to 95, 96 levels. I think that could be good entry point from a longer term view yet again from the power sector overall.
All right, let's jump into the last question that we have for the day. This is coming from Naima Khadir. Naima has bought Rain Industries at 110 rupees per share and is wondering whether to buy more or to exit. Kunal, I'll come to you first on the charts. What are the charts indicating to you on this counter?
So I think congratulations to the viewer for buying the stock at I would say the cusp of a turning point or turnaround level. I think 110, 100 odd levels was the breakout for Rain Industries in late December or rather the early December 2020 mark. From there on, the stock has moved on to 160, 170, formed those classical patterns of higher highs and higher lows as well. So I think that the viewer can hold on to the investments on Rain Industries. It's just that you could probably have a trailing stop loss mechanism. So you can hold on, probably have a trailing stop loss closer to 140, 145. I think that's a good enough support zone for the stock price. Since the mid-cap end of the market is also buzzing quite well, there is always a possibility that these stocks which are high beta and they tend to get more traction when the mid-cap frenzy is actually going on, that these stocks can continue to move up higher. But then it's prudent enough to also have a stop loss or a trailing stop loss in place since you're already sitting into decent profit. So I would advise a hold and have a trailing stop loss closer to 140, 145 zone for industries.
All right, that's a technical view, but on the fundamentals, Ashish, what's the view on Rain?
So in fact, this is again a stock which has given almost 350% kind of return in last 1 year from a low of around 45. This stock is now 155 levels. And this is not without any reason. If you see their performance has improved quite a bit. Their net profit went up from 120 to almost 320 crores for the quarter. And ultimate sector where they supply for their carbon products is aluminium industry, which is going, the prices, the way aluminum prices are going up, their prices are also going to support them. Along with that, they are into advanced material and cement business also, which is again getting a lot of traction. And one good thing is for Rain, whatever the capex they have done to expand their capacity, it is done. And in calendar year 21, we are going to see significant increase in their revenue as well as profitability. So in fact, I'll advise to new investors to look at this stock from 1 year time horizon. You may even get 250 to 75 in next 1 year in Rain Industries. And for existing investor, my advice will be to remain invested.